ADP data for June shows the private sector in the US added nearly 5 lakh jobs in June, more than double the number expected on the street. Stocks slump as the strong jobs print raises fears that the Fed may keep rates higher for longer. Stocks in the Asia-Pacific sell-off after a weak handover from Wall Street. The GIFT Nifty is also indicating a flat start for the Indian market. Finance Minister Nirmala Sitharaman urges public sector banks to increase credit to rural areas and the agriculture sector. The Finance Ministry also said net non-performing assets across PSU banks dropped to a record low of 1.24%. Tata Steel's first quarter India deliveries grow 17% while Europe and Thailand drop on expected lines. Titan says revenue grew about 20% in the first quarter while Dabur's update reflects improving sales trends in rural and urban India. The aviation regulator's audit report on Go First is likely to be released tomorrow, says the grounded airline's resolutional professional. Informs the company law tribunal that creditors have agreed to release 415 crore rupees to restart operations if the DGCA waves the green flag. Hello and good morning. You're tuned into Power Breakfast. I'm coming to you live from the Mumbai News Center and I'm Sonal Bhutra. Well, those were the top headlines that we are tracking for you. It's a Friday morning, but we do have a lot of cues coming in from the global markets, and that's the job reports data from the private sector. As per the report, is something which has spooked the global markets. We'll talk about that, but first up, let's take a look at what the Asian markets are doing. They're actually largely lower post the handover that they have gotten from the Wall Street. So the Taiwanese index is down 0.7%. We have Hang Seng, which is down 1.3%. Across the board, there is red on the Asian screen. Straits Times is down 0.4%. We have Nikkei sitting with cuts of 0.4%. So yes, it is looking like a weak start for our own markets, because if we pull up the GIFT Nifty, that one too is indicating that the start could be flat with some negative bias. So it's absolutely flat, down 1 point. But the global cues are indicating that yes, there could be some weakness after another stellar rally that we saw in our own markets yesterday. So let's talk about the US markets. That's where we saw a lot of action, because Wall Street ended Thursday's trading session sharply lower following stronger than expected private jobs data for the month of June. The Dow Jones closed over 350 points lower, the S&P 500 down 35 points, and the Nasdaq Composite over 110 points lower. Shares of Instagram owner Meta hit a 17-month high after the launch of its new app, Threads, a direct rival to Elon Musk-owned Twitter. Over 30 million users signed up on the platform in less than 24 hours of the launch. Meanwhile, reacting to the app's launch, Tesla owner Elon Musk suggested Threads was a replica of Twitter. Reports suggest the microblogging platform has threatened to sue Twitter through Meta over its copycat app. In a letter addressed to Meta CEO Mark Zuckerberg, Twitter's lawyer argued that Meta used Twitter's trade secrets and intellectual property to build Threads. Okay, let's move on with that. Private payrolls in the United States came in very strong for the month of June, reporting a jobs growth of 4,97,000 versus an estimate of 2,20,000. CNBC's Steve Leisman gets us the details.
ADP private sector payroll growth, as Eamon said, more than double the estimate at 497. Could be an outlier, but does confirm some high-frequency data we reported yesterday, suggesting a strong jobs report on the way tomorrow morning. The service sector and education and health services drove the hiring. Jobless claims were higher, but not much higher, and not much of an increase so far in continuing claims. That suggests those who lose work and apply for claims are pretty quickly finding work. ISM service index beating expectations, and the employment component of that index growing as well. All this raises questions. Is that 240,000 mark yesterday with a Wall Street estimate for the jobs report, could it be on the weak side, and whether the market should be thinking more like the Fed does about 2 more hikes?
Okay, that is a possibility of a further rate hike from the Fed. In fact, let's listen into Michael Feroli, who's JP Morgan's chief U.S. economist, talking about the conflicting signals coming out of the economy, gradual slowing in the labor market, and rates repricing Fed expectations.
Because there's a lot of conflicting signals coming out of the economy right now. And some of those conflicting signals were actually mentioned yesterday in the minutes to the FOMC meeting. So I think we'll have a better sense tomorrow. So it'll be easier to answer that question tomorrow than today. But right now it does look like the labor market, the slowing that may be occurring in the labor market is definitely very gradual. But we'll have a better sense tomorrow. The Fed has been pretty successful in disabusing the market of the notion that they're going to be cutting rates shortly after reaching the terminal rate. So I do think that would be, considered a success here in their communication policy. Of course, they've gotten a nice assist from the data, which has also kind of shaken off the idea that the economy would quickly buckle under the impact of the cumulative rate hikes. But I think July is obviously looking pretty much like a lock unless we get a disaster tomorrow, and then I think the path after that gets a little more interesting given the data we've seen.
Okay, all right. That's the word coming in from JP Morgan. Let's now get you the final update on our global market wrap this morning. European markets hit a 14-month low on Thursday, weighed down by rate hike jitters and stronger than expected private jobs data from the US. The French CAC led regional losses, sliding over 3%. The German DAX was down about 2.5%, while the British FTSE closed with a cut of over 2%. The pan-European Stoxx 600 also closed over 2% lower, the lowest level since late March. Tech and realty stocks lost around 3 to 4%. Germany's two-year bond yield, which is highly sensitive to interest rate expectations, rose to its highest since 2008, also weighing on equities. Okay, that's the global market action. A lot happening actually in the global arena. But how will these overnight cues impact our own markets? We have our research team joining in with just that, what the trade setup is looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Ekta, let me come across to you first up. What is the market setup looking like today?
Thanks for that. Well, for the past couple of sessions, it's been just a one-way street for the entire markets. The market surged to record highs in yesterday's trading session as well. It was the sixth straight session of a record high for the Nifty. We have gained close to around 5% in 8 consecutive sessions for the Nifty, up around 865 odd points. The Nifty crossed 19,500 on an intraday basis yesterday. We had the broader markets which outperformed, advanced decline ratios steady at around 2:1. Mid-caps are up now around 15% on a year-to-date basis. And these gains came in despite the caution over the FOMC minutes. FIIs continue to pump in money, so they bought around 2,641 crores in yesterday's trading session, though the DIIs equaled it almost in terms of a sell figure. This morning, yes, the global cues are weak again. So we have the US markets which closed in the red despite due to that ADP private jobs report, which in fact exceeded expectations on the upside. We have Asia, which is weak. SGX indicating a bit of a flat start. Now we'll have to see whether or not this kind of outperformance relative to the globe continues, or whether any kind of cracks would show up in our markets because of the weakness that we're seeing in the global space. We do have the non-farm payrolls data to watch out for from the US, so that would be keenly awaited to give a sense in terms of what we can expect from the Fed, or whether or not we are actually isolating ourselves from the US as well as the other global markets and becoming a favored destination for the FIIs. Healthy FII flows, monsoon progress, Q1 updates, all of that is aiding momentum, and we probably expect that to probably continue on a relative basis. A little bit of profit booking wouldn't be something that we wouldn't warrant at this point.
Okay, all right. Looks like it could consolidate at these levels. Thank you so much, Ekta, for all those cues. But a lot of stocks on our radar, a lot of quarterly updates again. Sirbhi has that list. Sirbhi.
Hi, good morning. So first one on my radar is Reliance. NCLT approves the demerger of the financial services unit, Geo Financial Services. Some Q1 business updates coming in as well. First one is Titan. They saw a revenue growth of 20% on a year-on-year basis, and the jewelry division saw a growth of 21%. Dabur, their Q1 update says the consolidated business, including Badshah Masala, saw a growth of 10%, and the international business saw a strong performance with double-digit growth. Tata Steel, their India production volumes were up nearly 2%, and the Europe production volumes were down 26% on a year-on-year basis. Sobhad, their Q1 total sales were up 28% on a year-on-year basis, and the price realizations were up 25%. Apart from that, JK Cement is also on my radar. The company's arm, JK Max Paint, acquires 20% stake of Acro Paints for 60 crores. And lastly, IOC and Praj will also be in focus as they form a JV for building biofuels production capacities in India.
Okay, all right. That is a long list. Thank you, Sirbhi, for getting us up to speed here. But a lot of action in the F&O space as well. Manglam joins in now. Manglam.
Well, yesterday was weekly options expiry, and this one again went to the bulls yesterday. In the last hour of trade, we saw a big surge. The Nifty closing in very close to that 19,500 mark. In fact, the last tick was above that 19,500 mark itself. So that was a big positive. The mid caps were really, the star of the show, up almost 1% on that index as well. The institutional volumes on the cash side were, of course, impacted by a couple of bulk deals as well. So as a result of which, the net buy from the FIs was close to around 2,600 crores. The DI sold about 2,350 odd crores. But the FIs continued to buy in index futures despite a big rally and despite, them being already long in the index futures. We see incremental money chasing index futures. So 780 crore worth purchase, 10,000 long contracts added for just about 2,000 short contracts which are added. And as a result of which, the FI long exposure is now at 73%. Remember, this number just a few days ago was 67, 68 odd percent, and now has seen a bit of a jump. But again, like I said, it was the index, stocks which were the mid-cap stocks which were doing extremely well. And FI has bought nearly 3,000 crores in stock futures. Out there, they added 25,000 long contracts and covered 16,500 contracts as well on the short side. So that's telling you that it is a very stock-specific market, even as the index continues to make new highs. So a lot of long positions added on names like MCX, M&M, and Hindustan Petro. The only short trade right now is that on Eicher Motors. A lot of short positions continue to be added on that counter despite a 10-12% decline over the last few trading sessions. But just keep an eye out on a couple of factors that indicate that maybe we may face some sort of consolidation. One, despite FIs buying in Nifty futures, we are seeing the premium come down from 68 points to around 38 points itself. And secondly, the put call ratio still hovers around that 1.5 mark. So that's something we will have to monitor. In terms of active Nifty options, we have the 19,500 call and 19,500 put. Both of them, the ones that expire next week, are in focus. 19,500 now is a fulcrum. So you're looking at a 100-point range below 19,500 and a 100-point range above that as well. So, on the way up, while the market's in a blue sky scenario, just remember that the supports are moving higher. Now the support zone is 19,350 to 19,400.
All right. Okay, guys. Thank you so much for joining us and prepping us up for this trading day ahead. Let's slip into a break. When we return, Finance Minister Nirmala Sitharaman asks public sector banks to ensure proper reporting of bad loans and step up priority sector lending. More on that when we return. Welcome back. You're watching Power Breakfast on CNBC TV 18. Let's get you some more global updates actually. US Treasury Secretary Janet Yellen has arrived in China and is scheduled to be there till the 9th of July. The visit comes in a bid to find common ground between the two countries. CNBC's Eunice Yoon gets us an update on what the agenda is for day 2.
Well, Treasury Secretary Yellen has a long day ahead of her on Friday. A senior Treasury official said that on her first day of meetings with Chinese officials, she's going to start off with a sit-down with the former Vice Premier Liu He. He's the man who negotiated the trade deal with the U.S., with the Trump administration for China. And then she's going to attend a business roundtable that's hosted by AmCham China. She's going to have a bilateral with the Premier, Li Qiang, and then be treated to a dinner hosted by the former PBOC or central bank governor Zhou Xiaochuan. Now, for the Chinese side, based on official commentary as well as state media reports, the Chinese have suggested that they are seeking what they call signs of U.S. sincerity. So that is some combination of either reducing or canceling the Trump-era tariffs on Chinese goods, lifting sanctions on Chinese companies and individuals, and ending the export curbs. Now, Yellen is viewed here as a pragmatic person, a sympathetic ear. She has previously said that she wasn't so sure about the benefits of the tariffs, and also has called decoupling something that the Chinese also don't really like, disastrous. She's also said that she's coming here looking to find common ground, and that's exactly what the Chinese would like to do as well.
Okay, this is an important trip to track as well for both the US and China. But with that, we'll take a short break. We'll get you more news and updates on the other side. Welcome back. You're still tuned into Power Breakfast. Well, Finance Minister Nirmala Sitharaman held a meeting with heads of public sector banks. She urged the bank chiefs to increase credit in rural areas, agriculture sector. The Finance Ministry also said that net NPAs across PSU banks have dropped to a record low of 1.24%. Sapna Das is here with more details. Sapna.
Absolutely. If you look at the gross and the net NPA figures of public sector banks, March 2023, under 5% as far as gross NPAs are concerned, and between 1.25 to 1.25% as far as net NPAs are concerned. If I'm not wrong, the net NPA number that the PSBs have clocked, I think it's an all-time low. That's one. Obviously, this is also fallout of the over 1 lakh crore worth of net profits that they have done in FY23. But the question also remains, what are they going to do in the current year? In the meanwhile, the Finance Minister's advisory to the banks is very clear. First, picking off straight from the NPA angle, rather the fact that the NPAs have fallen to an all-time low. Here, the FM has cautioned banks again, and in good spirit, that kindly maintain proper reporting of NPAs, kindly conduct regular internal reviews, and make sure that the reporting is accurate. This is basically an advisory to sound them out that things have been good things have been achieved after a very long time, and that momentum should not be lost. Second, also in terms of the basic schemes that are being run, like PM Swarnidhi, and also the fact that credit offtake under the priority sector lending, especially the subcategories under the PSL norms, that needs to be stepped up. And last but not the least, also in terms of the regional rural banks, the Finance Minister herself will be undertaking a review in the current month and the next month, and she'll be also touring the country to make sure that this agenda goes forward. In the meanwhile, bankers have been already sensitized that the sponsor banks or RRBs should undertake technological upgradations of RRBs, and that's how it's going to pan out. But of course, I think the big takeaway here would be the fact that the bank performance has been good, healthy, and the net NPAs probably are at an all-time low.
Sapna, thank you so much for joining us with all those details. So that is about the PSU space. But some relief coming in for Go First as well. It may be inside. The aviation regulator's audit report on Go First could be tabled by the end of this week, says the grounded airlines resolution professional. The resolution professional also informed the tribunal that creditors have agreed to release 415 crore rupees to restart operations if the DGCA waves the green flag. Meanwhile, the resolution professional has also hinted at challenging the Delhi High Court order that allowed lessors access to aircraft for maintenance and inspection. Moving on now, India's much-anticipated third venture to the moon, the landmark Chandrayaan-3, is slated to lift off on July 14 from the Satish Dhawan Space Centre in Sriharikota. In an address, ISRO Chairman S. Somnath said that the launch, if successful, is scheduled to reach the moon by the 23rd or 24th of August. The Chandrayaan-3 will be a follow-on of the Chandrayaan-2, which took off in 2019. However, unlike its predecessor that carried an orbiter as well, the Chandrayaan-3 will only consist of 3 modules, a propulsion, lander and rover. Okay, that is the update. Of course, we'll keep getting you more updates on this one. But with that, it's a wrap on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next.